Hello everyone. India is the world's largest importer of palm oil and it depends on imports for more than 60% of its needs. That's nearly 8 to 8.5 million tons. Indonesia's recent ban on refined, bleached and deodorized, that is RBD palm oil, lower oilseed production and rising production and logistics costs have put significant pressure on the margins of several FMCG companies. However, Indonesia has now lifted its restrictions and the Indian government has cut import duties on edible oil. Following tariff cuts and lower inflation, base prices for RBD palm oil and RBD palm oil cooled nearly 30% to $1,300 per ton. Crude oil also fell to $107 per barrel. The recent correction in palm oil prices improves the outlook for FMCG companies. The current slowdown in the rural economy is due to high inflation, but the rural economy is set to grow substantially in the wake of good monsoons and higher MSP of Kharif crops. Large companies are adopting many India strategy and are using a direct-to-consumer path along with lower unit packages and bridging packages at attractive price points to improve their sales. We believe these initiatives would ultimately lead to an increase in the valuation of FMCG companies. Generally, FMCG companies trade at a very high valuation owing to their strong growth prospects and high return ratios. Such aberrations in the market give long-term investors a chance to enter these high return stocks that can be consistent compounders for their wealth creation. We try to capture a couple of FMCG companies early on as they may be major beneficiaries of subsidizing inflation and improvement in rural demand outlook. The first stock we look at is Hindustan Unilever, HUL. HUL has gained a substantial high market share across its entire product portfolio. Haircare recorded the highest market share gain, hitting a high of 15 years in 2021, with Clinic Plus, Dove and Sunsilk ranked as the top 3 haircare brands. Surf Excel is now the largest laundry brand. Over 75% of its portfolio has gained market share in value and volume terms. Liquid detergents and fabric softeners have grown 4 times over the past 5 years. Indulekha has grown 6 times in 6 years. The company launched new products such as Hellman Mayonnaise, Kisan Peanut Butter and Brew Beaten Coffee in the food and beverage category. Tresemme has launched the thick and complete shampoo and conditioner with biotin and wheat protein and has expanded its range of hair masks. In the skincare segment, Dove launched Love and Care, a new range of hand and body moisturizers, while Pond's introduced its Golden Beauty range with face wash, serum, day creme, peel-off mask and night creme. HUL has increased its presence in the direct-to-consumer channel with fully functional websites for its brands such as Lakme, Indulekha, Simple and multi-brand platform uShop. Simple, Love Beauty and Planet and Baby Dove are fully operational digital-first brands. HUL digitally captures around 20% of its demand. Inflation has had a drastic impact on performance recently as it is highly reliant on commodities such as Brent, benzene, kerosene and vegetable oil. The company reacted to these new dynamics and sought to localize the source of many of its chemicals. It introduced new suppliers and flexed formulations and made strategic purchasing actions. HUL used sophisticated digital tools to identify innovation partners, monitor and review quality performance, and track logistics and supply risks in real time. The company would continue to take judicious price increases and could continue to see some margin squeeze in the near term. At the current market price, the stock is trading at 45 times its FY23 earnings and 40.8 times its FY24 earnings. On the valuation band, the stock is priced cheaply and can be considered from an investment perspective. The next stock is Britannia. Britannia is one of the oldest FMCG companies in India and is known for its biscuits in the value category. Britannia is present in the segment of biscuits, breads, cakes, rusks, and dairy products. It has well-known brands such as Good Day, Crackers, NutriChoice, Marigold, Tiger, Milk Bikis, Jim Jam, Bourbon, Little Hearts, Pure Magic, and Nice Time in the biscuit segment. The dairy segment, as well as breads, cakes, rusks, cream waffles, stuffed croissants, and savory snacks, are gaining momentum with the launch of new products. In the biscuit category, the Good Day, Marigold, Milk Bikis, NutriChoice, Tiger, and 50/50 brands joined the billion rupee double-digit club. The company launched various new biscuits such as Milk Biki Atta, 50/50 Golmaal, co-created a new Marigold variant known as Marigold Jeera, and revamped the Choco Chip variant with the Good Day brand. In the cake segment, it is innovating products at different price points to face the competition head-on. Britannia's strategy is to strengthen its portfolio by launching new products, developing premium brands, and expanding basic cake portfolio. Demand in the rusk segment has stabilized after COVID, and the company sees a significant opportunity to innovate in this category. To gain leadership in a healthier bread portfolio, the company launched high-fiber bread, hot dogs, choco bun, and choco bread during the year. The company's dairy segment is considering partnerships with quick service restaurants and restaurants in 2023. It will incubate fresh business through the launch of multiple products, namely dahi, paneer, Greek yogurt, and smoothies under the Come Alive brand. The distribution of cheese and winking cow has improved through traditional channels, and e-commerce is being developed as a key part of the distribution strategy. Treat creme wafers, accompanied by the recent launch of Treat sticks, has been encouraging. Britannia Treat center-filled croissants have received a positive response from consumers, and Britannia is striving to strengthen its Time Pass brand to achieve a significant position in this category. The company responded with price increases and cost control to offset the inflationary pressure. As the company battles wheat and palm oil inflation, a gradual improvement in the product mix would help EBITDA margins. At the current market price, the company trades at a PE multiple of 44 times its FY23 earnings, which is cheap based on the valuation bands. Both HUL and Britannia have corrected close to 21% and 18% respectively from their highs, and offer a lucrative opportunity for long-term investors to buy these stocks. Long-term investors should keep in mind that the inflationary scenario is transient in nature and would eventually subside. Investors can do further research on risk and concerns related to these investments and take a prudent investment decision. This is Viral Shah signing out. Happy investing. This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.